welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the opening action in trade, all the trading setup that you must take in view, as well as all the market strategies you need to follow for this fresh and new week as well. We're amidst all these festivities back home in India, and the markets are also trying to settle above in trade as well. When we look at the last week, another weekly advance is what we've logged in, despite the markets falling from the day's high level on Friday as well. Now, remember, we are going to be starting this week's trade, however, on a slightly muted note, because we've been weighed down by weak global cues. On Friday, the Wall Street, the major indices, they slumped on Friday. Worries have been surfacing, and therefore the Dow Jones fell by nearly 2%, S&P 500 lost 2.7%, and the Nasdaq plunged the most of 3.6%, erasing nearly $2 trillion in market value. Now remember, following this, the Asian markets have also seen a red open in today's trading session, as both US and China have been tightening the trade restrictions and have exchanged sharp remarks as well. Beijing has said it is not afraid of trade war following US President Donald Trump's vow to impose 100% tariffs on the Chinese imports, and therefore ASX 200 dropped by 0.6% this morning, Kospi tumbled 2% odd or so. Japan's markets were closed for a holiday this morning, and Gift Nifty is also indicating a slightly muted start in trade today at 25,300 odd levels. So let's look at how the markets really open in today's trading session and what pans out in the trade today. Remember, there were a lot of these fears surrounding the market participants around a potential huge gap down on D Street after US President, latest triad against China on Friday and Saturday. But there was a taco trade also over the weekend that has ensured that everything will be fine with China yet again. Now, again, back home in India today, the session will also be looking at a lot of earnings reactions from names like Avenue Supermarts. We will also see shares of India's largest IPO of 2025, Tata Capital, making its debut on the stock markets today. Today is also, viewers, the last day that Tata Motors will be trading as a consolidated entity before the record date tomorrow for the commercial vehicle business demerger as well. So keep Tata Motors also in focus. Of course, apart from it, IT stocks will be in focus. Remember, TCS, we've already seen how it reacted on Friday. And HCL Tech will be reporting its numbers today, along with Anand Rathi Wealth, while BLS International and Welspun Enterprises will also remain in focus amidst a lot of news flows that are actually coming in, and we will be highlighting all of that for all our viewers as well. We will also be awaiting for our guest to join in, Gaurav Sharma, Associate Vice President and Head of Research at Globe Capital, who will be joining in shortly, share with us his views on the markets as well. But meanwhile, let me highlight some stocks for all of you to note as well. Like I pointed, Mart, that's owned by Avenue Supermarts, will be in focus. The consolidated net profit for the company grew by 3.8% year on year. Compared with 659 odd crore rupees a year ago, the company has posted, 684 odd crore rupees of the consolidated net profit. Revenue is increased by 15%. EBITDA has grown by 11%. Margins, however, have declined by 29 basis points to 7.29%. Keeping in mind, Hindustan Construction Company, it has secured a 204 crore rupees order from Hindalco, will be in focus as well. We will also be looking at some more earnings like Euro Pratik sales have come in, revenue up 33%, EBITDA up 56%, and the margins at 34.3% versus 29.2%. Net profit, however, seen a dent of 34% odd on a year-on-year basis at 9.7 odd crore rupees. Vari Renewable Technologies will also be in focus here. The results have come in on the consolidated basis of 47.7% growth on the revenue front. We've also seen the EBITDA at 158 odd crore rupees versus 61 odd crore rupees earlier in the last year, same period. Margins coming in at 20.4% versus 11.7%, and net profit at 116 odd crore rupees. So mixed set of earnings there, but largely on the positive side. Phoenix Mills, here the company has given a Q2 update. Retailer sales in operational malls up by 13%, collections up by 92% at 115 crores. Gross residential sales up at 139 odd crore rupees. Same way, Signature Global will be in focus. Here the pre-sales were down 27% at 2010 crores. Collections were just mildly up by 2%. Adani Energy Solutions will also be in focus because of the update that they have given. Transmission business has added 190 CKM in Q2. Distribution losses improved to 4.36% in Q2 as well. So, keeping in mind all of these stocks that we have in focus, let's also talk about MGL, where the brokerage houses are turning positive on. Now, Morgan Stanley has a report on MGL, Mahanagar Gas, with an overweight rating. They have given a target price of 1749 on the stock. Why do have they given that? Because of the recently launched new Mumbai airport, which they believe has a potential to add 4 billion miles. And as new road networks develop, that could also add up as much as gas consumption as today in a decade for MGL as well. Now, the natural gas will not be just be a transition fuel, but core for Mumbai's transportation needs as the city expands. And MGL could add 100 basis points annually to gas consumption growth, 7% from 6% earlier, as airport ramp up and doubles its TAM at full capacity as well. So that will be also in focus as well. Let's also look at some of the other key reports that you could be watching out for. I'm looking at K FinTech. Here, Citi has come out with a report, upgraded the stock to buy, raised the target price to 1215. Now, Citi believes that K FinTech is well positioned to benefit from robust mutual fund flows and growth in the alternates as well, and also rise in international clients aided by Ascent's global capabilities and near-term buoyancy in the primary market space as well. Now, unlike CAMS, KFIN benefits from lower pressure of telescopic pricing, is what they believe, and of course, higher share of smaller clientele. KFIN continues to augment its product capability, and thereby they are positive on KFIN Tech. Let's now go across to our guest now. Gaurav Sharma, Associate Vice President and Head of Research at Globe Capital, is now joining in on the show with us. Warm welcome to you. Good morning to you, Gaurav. Good to have you with us yet again. Help us understand what's your fresh view on the markets now, what we are seeing at this point in time. We've already started the pre-open tick on the higher note of about 0.5%. This is much better than what initially was thought about. Remember what transpired on Friday and Saturday from Donald Trump yet again on tariffs on China was something that could be seen as a dampener, but then taco trade again played back and we have a mildly positive start yet again. How would you look at the markets in this fresh and new week, and what's your suggestion?
Hi, Sakshi. Good morning. Thanks for having me today on the show. So yes, after Friday's session, what we saw at the Wall Street was quite fearful here that Nifty index might also open up with a large cut. But against all the odds, what we are seeing just with the initial opening takes is we could mildly open somewhat in green or maybe on a flattish tone. Whichever way it is, I think it will be a lot sweeter opening with what which was actually expected. Now coming on to the levels front, Nifty index settled on a fairly positive note in the session gone by. Any further upside move will trigger a fresh round of buying, and that would eventually take Nifty index towards 25,600 and likely towards much closer to the lifetime highs as well. Therefore, we are staying put. I'll be concentrating at the first half an hour of trade because it is very vital to see whether the Nifty index is able to hold on to the levels where it is opening up and trying to build up ahead as well or not. As far as BankX is concerned, in the previous 7 to 8 trading sessions, it has played a pivotal role in providing the much needed support to the benchmark needed in Nifty index. Going forward, it is also trading on a very sweeter positive note, and I'm expecting the upward move to continue as both PSU and the private sector stocks are trading in tandem, and which is actually providing the boost as far as precise levels are concerned. On the higher side, 57,300 is the level that can be eyed at in the immediate near term for Bank Nifty.
Okay, fair point. I hope this has given an overall view to the investors as to how to look at the markets in this fresh and new week now. Gaurav, help us understand how are you looking at the opportunities for this week? Is it largely going to be on the earnings side itself? And how are you looking at some of the IT companies that are now reporting their numbers? And after TCS, what's your thought how it has delivered the numbers? And now today it will be HCL Tech from the IT pack that will be in focus as well. although the numbers might come only after the market hours. Your suggestion on how to trade the IT names?
Actually, yes. IT is what we are seeing is some bit of buying coming in, and I think whatever 1 or 2% growth that these companies would likely be posting in this quarter numbers is actually discounted for. Most of the larger or the good IT companies have already rallied more than 5% in the past couple of sessions. I don't really see a much of a of a smart up move or a fresh buying coming in this space. They might come up with another 2, 3, 4 odd % kind of an up move, but I don't really think that should be considered for a trading opportunity. They are good to be looked at from a long-term investment opportunity. If any person is willing to park their money uh, for the next 2 years, ID is at a very fair valued position. But as far as short-term trading is concerned, there are a lot more opportunities, lot safer opportunities, I would rather say, and I'll be eyeing at those ones.
Okay, got that. Let me ask you on some of the news flow related stocks. Today, again, we will be seeing a reaction on Avenue Supermart post the earnings. How are you looking at that stock? We do know for a long time it has been reeling under some competitive pressure. This erstwhile historically, seen as one of the wealth creating stocks, today again is indicative of a opening above 3% after the earnings. 44.50 has actually lied low for some time and consolidated for a fairly long bit of time as well. Today, post the earnings, we do have some brokerage houses reports as well. Now, Citi believes that they still would go with a sell and a target price of 3,250. They believe the profitability has remained subdued and it's below the estimates. Now, they also believe the triple SG growth has moderated to 6.8%. Revenue per square feet has grown by only 1.3% odd or so. So those are their suggestions. Now, apart from this, we are also given to understand that CLSA has in fact given a high conviction kind of report where they have given an outperform rating and a target price of 6,300. So just look at the brokerage houses, how wide range of a price target they are giving on Avenue Supermart. So a contrasting report is what we have completely. City giving a sell rating, but CLSA saying high conviction. Definitely believes that it's a reported below consensus sales and net profit. Sales have decelerated due to the inclement weather, private label price deflation, lower sales density for new stores and new geographies is what they believe. Employee cost has grown by about 33%. That's also higher. It's driven 4.6% miss on the EBITDA as well. But they actually believe PAC was largely impacted by the finance cost. As DMart took some short-term bridge loans to accelerate, and store additions they believe have been better on a year-on-year basis. So, how does an average retail investor really look at this retail stock at this point?
Sakshi, for DMart, it came up with its results on Friday. Not at all bad from where I see it. It is a 4% rise in its net profit and a 15% growth in its revenue. So what impresses me is a 15% rise in its revenue, because that clearly indicates that it has been able to hold on to its clients and the sales figures, and that will eventually culminate into much higher profits going forward. Therefore, from my perspective, it is not at all a sell kind of a stock or an avoid kind of a stock. If any profit taking comes in, I'll be more interested to buy the stock on dips. Currently, it is trading around 4,300 odd levels. If any dip comes in the immediate near future and the stock falls below 4,100 or close to 4,000 odd levels, I would consider this to be a buying opportunity here. Not at all a sell. These are not poor set of numbers. These are decent numbers, and buy and dips is what I'm suggesting in the stock from a medium to long term perspective.
Okay, fair point. So that's how you should be looking at the stock at this point. And let's also look at some of the other names as well that we are getting to see in the news flows as well. How would you look at the real estate space is what I wanted to actually ask you too. At this point in time, we have seen last couple of sessions, last couple of weeks, a lot of momentum in the real estate space as well. We have been getting a lot of business updates. Today we have from Phoenix Mill, Signature Global as well. Most of the retailers have actually talked about how the pre-sales collections, and malls have actually gone up. How would you really look at the sentiments there in the real estate space, and what exactly would you believe here?
Obviously, Sakshi, the real estate sector, real estate index on the whole has been consolidating in a range here. No meaningful profit taking was seen on a broader front. Some bit of here and there nook and corners were seen. But overall, what I sense is a bounce is pretty much on the cards now. Stocks like DLF, stocks like Lodha, which has performed well, and I think they are very well positioned here and can be looked upon from a trading opportunity. They are a much safer bets as far as the real estate pack is concerned. And if one has to go about it, I think these are some stocks which are currently at a very attractive level. Let me just look at share the levels of Lodha. It is currently trading about 1155. The supports are pretty much close by. 1100 is a very strong support for this stock, and a bounce towards 1200, 1250 can be seen in the next 1 month or so. Similar is the case with DLF, the largest real estate company in India as far as MCAP is concerned. Again, the stock is available at the good support points. Supports are placed somewhere around 710 odd levels. Stock is quoting at 740. There's a good buying trading opportunity. 775 to 785, 800 levels can easily be seen in the stock in the next couple of weeks.
Okay, got that. I hope this has also given you some understanding, viewers. The markets are settling in the pre-open trade right now. We're given to understand 25,177. So on the back foot is what you could again expect the markets to start off at, exactly as what the GIFT Nifty was indicating, 0.4% lower, 25,177 at this current point in time. So we could be starting Monday on the back foot, but let's see whether this dip will be bought into right after we start the session today. Let's also focus on two stocks from the Tata Group that will be in focus today. In fact, one of them will get listed only today, and that's Tata Capital. On the IPO, what are you supposed to do post the IPO gets listed? That's something that we'll try and understand. And the other one will be on Tata Motors. Now, remember, this is the last day for all the investors to buy the stock before the record date. Now, as a merged entity, both the commercial vehicles and passenger vehicles business of Tata Motors together will be reflected in Tata Motors till today. Now, after this, it will be seen as a demerged entity, and therefore the listing will happen eventually. The record date for Tata Motors demerger is October 14th. The date marks a critical phase of the demerger as it determines the shareholder eligibility to receive the shares of the newly created entity when it gets listed as well. So this is the last chance, final trading session. In case you've been looking at, yes, I want to stay with the passenger vehicle business, and the commercial vehicle business will be separately listed. So please take a call on that front too. First up, on Tata Motors from your side, Gaurav, we've been seeing that from last 1 year, it has really tested a lot of patience of investors in terms of the stock price performance. In 2024, Tata Motors was seen as an outperformer. It went up pretty swiftly after a long haul, and therefore people were assuming that things have turned much better and it's ready for a re-rating of sort. But this year, again, it's back to very low consolidated level of around 600 to 700. I think this is the broad range that it has performed in this entire year. So virtually not given any returns to investors. How would you look at Tata Motors now that it's getting ready for a demerger?
Yeah, I think we have to look at Tata Motors from a little longer perspective, not in the what has happened and how the stock has performed in the past 6 years or in the past just 1 year or so. When we look at a 5 year picture, the stock has rallied from 120 to I think close to 1100, 1150 odd levels. So that is almost a 10 times mover. And from these levels, the stock is now currently trading at somewhere close to 670, 680 odd levels, and a demerger of its the commercial and the passenger vehicle business is going to happen. October 14 is a set date for that record date for that demerger. Now coming on to their figures, what on the sales front they have been doing. As far as passenger vehicles are concerned, is it has again moved up and taken the second position as far as monthly sales figures are concerned for the September sales figures. It has taken over. Mahindra and Mahindra. Now Mahindra holds the third spot, Tata Motors on the second one, and Maruti commanding the first position was slightly above 40% of the entire market share. So what I'm trying to say here is the stock is just consolidating. It is just a wait and watch for the company, and whatever transition phase that the company is in, I think it will take another 6 odd months to settle down, and thereafter we would see a resumption in the up move in the stock. Now, with the business being demerged, it will be a choice for the investors to look at where they want to concentrate. They want to concentrate at the larger truck business. They have a company for that, and again they have acquired a European firm. So therefore, it comes out to be Tata Motors passenger vehicle. We have the Jaguar Land Rover Kitty plus the Indian business and their Indian export business as well. As far as truck business are concerned, we have the already existing Indian setup for the truck and the bus business, and the new international global business as well. So it will be a choice for investors both ways. From a long-term perspective, both these companies would likely to actually deliver good returns to the investors as they have done in the past as well.
Okay. Gaurav, let's talk about the one that's getting listed today, Tata Capital. Now, the big question is it is the biggest IPO of 2025. Definitely had a lot of anticipation, when the IPO was about to come. Even during the IPO subscriptions, we've seen all across the board subscriptions take place. But historically, there have been very few IPOs of upwards of 10,000 odd crore rupees that have led to outperformance on D Street as well. What's your suggestion here?
Absolutely. I think there are two key points here. First, you have already mentioned that the larger IPOs have failed to impress the investors, the traders, no listing gains as such. When we talk about any kind of maybe the near term, the larger IPOs that have come in, or even in the past, ranging from Reliance Power to LIC to now, Tata Capital, not much of a gray market premium is here. We are not expecting any kind of listing gains coming in, and that is bound to happen. What we see in the secondary market once a stock gets listed, large cap stocks have a tendency to move slow and provide consistent returns, and that is what exactly the investor, a prudent investor, should be eyeing at. The quality, the pedigree, the business lineup is phenomenal. I think you should look at Tata Capital from a long-term perspective rather than sitting just and taking a view from a shorter term listing gains for about 10, 15 odd percent. I think this would not be a right parameter to judge that kind of a quality firm.
Okay, got that. Let's quickly shift focus to find out how the markets are trading then, and we'll come to some of the other stocks as well and see how things are moving in shape today. 0.3% lower, 25,200 albeit with us right at the open, but we have started on the back foot. Let's look at the Nifty Bank and see how that one is opening. Also slightly muted, 56,543, 1/10% lower for the Nifty Bank. Let's pull up the IT index as well, about 0.8% lower, 0.9% lower in trade. Remember, today again, HCL Tech comes out with the numbers, but it's definitely starting on the weaker show, at least at this point in time. Mid and small caps also starting lower, 0.3% of a loss for the mid caps. Top laggards on the Nifty are actually from the IT pack, Infosys, HCL Tech, Wipro, all of them are actually starting on the lower end. Even the advances on the NSE are just about 535 to declines on 1250, 1232 odd levels. So you can actually see that the market breadth is also on the weaker end, at least at this point in time. Some of the banks that are losing ground are Axis Bank, HDFC, and PNB as well. And that's how it is reflecting all across the banks that are lower. Very few and far between Nifty stocks that are higher. We have Indigo as the top mover. Eicher Motors, there are brokerage houses updates there. That's positive. You have Apollo Hospitals, that's also on the positive zone. We have Bharti Airtel, Asian Paints, Bajaj Finserv, Bajaj Finance, ICICI Bank, Sun Pharma, and Bajaj Auto. The only Nifty gainers, at least at this point in time. The rest of them have all slipped. Trent is down, BEL is down, Infosys is down, Tata Motors is also down. Remember, we've been talking about it as well. Let's also pull up, Avenue Supermart or D-Mart, because that's the one that's reacting to the numbers today. And let's see how things are panning out in trade for Avenue Supermart. 1.3% lower in trade at the very beginning. So it's slightly reacted on the negative side. But BLS International Services, that's what you need to watch out for. Now, viewers, the stock is down by about what 14% odd in the morning trade. What has happened here? Shares of BLS International Services are down in trade. This is after there have been recent developments regarding future tenders with the Ministry of External Affairs. Over the weekend, the company said that it has been debarred from participating in any future tender with Ministry of External Affairs for the next 2 years. That means they cannot participate in any, Ministry of External Affairs or government orders for the next 2 years. Now, remember, these government tenders make up for about 12% of the company's overall revenue, and that's likely to get impacted. The ministry has issued debarment order based on allegations, including court cases and multiple complaints from passport applicants, and therefore, BLS has said that they will be assessing the order and rely on the legal remedies to address the issue. But for now, you're seeing a 14% drop on the stock right at the open. But let's quickly go back to Gaurav and try and understand what's happening on the markets and on BLS as well. 17.2% lower now. Gaurav, your sense on BLS International, always seen as a play on travel tourism basket. International travel has been consistently improving in India, and that's where BLS also comes into picture for providing of a lot of visas and those facilities. Your suggestion now, since Ministry of External Affairs has barred the company from participating in any tenders over the next 2 years now.
This is a big negative blow for the company now. Its lead business is going to be impacted, and moreover, it's a huge dent on its image. The kind of business this company is into, I think MEA, the Ministry of External Affairs, barring the company for 2 years is a big negative for this stock, and that's what exactly we are seeing. More than 15% cut in today's trading session, and it may slide further also. It is not possible to assess these kind of damages just on the basis of any kind of chart performances or chart formations. Going ahead, even 250 is a level that is open on the downside. So it is just a wait and watch for some more time. Next 2-3 days will actually lead to a further settlement of this stock.
Okay, fair point. Let me also just pull up the winners as well, just far and few between names that we have. Aisha Motors, let's talk about the auto space at large. Jeffries, remember viewers, has come out with a report, a buy rating, a target price that they have raised to 8,000. They believe after a flash 12 months phase, the RE registrations, Royal Enfield registrations have actually accelerated to 14% year on year in the second half of FY25 and 23% in the first half of 2026. Now, they expect Royal Enfield to be key beneficiary of the two-wheeler premiumization, while its toughest phase of competition is also behind. The hourglass structure of the two-wheeler market with large gap in 200 to 300cc now provides an opportunity for Royal Enfield if it decides to expand the portfolio under the Hunter model. And they have also, Jeffries has upgraded the FY26 to FY28 EPS estimates by 3 to 8% as well. 8,000 target is what they are penciling in for Aisha. Gaurav, how will you look at it?
I think the stock price of Eicher Motors speaks all about the company and their future plans and whatever currently is going on. The stock hasn't corrected at all. It is consolidating just near its 52 weeks highs, all the lifetime highs. So that's narrates the story on its own. I think we should be more precisely looking at a Bajaj Auto as well. The stock has corrected, and it is all set for a rise now. A sweet 400-500 points of a gain can be expected in this stock, currently quoting around just at 9,000 odd levels. A small stop at 8,800 should be enough. 94 to 9,500 are the targets that one can eye at. This is a short-term trading call. Once the stock is able to surpass 9,500 levels on a closing basis, it will open up gates for a further rise towards 10,000 and higher levels. So I'll be more interested in Bajaj Auto when compared with Eicher. Eicher has been staying tall, but not a trading or investment call at these levels. The stock is not at all corrected, whereas we have seen some slight of correction in Bajaj Auto.
Okay, let's also actually welcome Prashant Tapsi. He's joined as Senior Vice President Research Analyst at Mehta Equities to be with us in the conversation of the markets. Welcome you, Prashant. Good morning. I want to, we have been discussing a lot about the news flows related and stocks and all those sectors as well. But I want to first begin by understanding from you, how difficult is it to assess on the markets the kind of targets that will come in just, over the next week by Diwali. Seems to be on the the D street that there is still not as much enthusiasm as usually there is right ahead of Diwali. What exactly is your sense?
Yes, good morning, everyone. So overall, the sentiments are very positive. Only the risk would be on the Trump tweets. So that would keep Indian markets very volatile. But overall, if you see the Q2 business updates, we are seeing some kind of positivity in the month-on-month business updates. But again, the result seasons are on, and I think we will see a lot of updates from the Q2 earnings that will keep markets very much on a positive mode. Today's 70 to 100 points down was only because of what Trump has tweeted last Friday on the Chinese Indo-Chinese tariff war. So I think India is in the fear zone where India may also get some kind of tweets which will keep the pressure on the tariff on India. So overall, the sentiments will remain a positivity, and the Diwali would be great. I think we will be covering all these losses, whatever we have seen in the short period of time. So I am seeing markets to go towards 25,500, 25,600 on or before Diwali.
Okay, got that. Let's actually understand from both of you now. Prashant, you go first, and then we'll also come to Gaurav to select some stock ideas. In the run up to Diwali, and maybe as your festive chosen stocks, what would you really look at, Prashant?
I would like to add first SBI cards. I think card business is doing great. The way how people are shopping in all the formats, the online shopping or the physical shopping. I think the upcoming results or month-on-month updates of SBI card would be better than what it has done from last 2 3 quarters. So I think SBI card can see some kind of all-time highs, even cross 1,000, in the coming few months.
Okay, SBI cards, top choice there from Prashant. What about you, Gaurav? Which sector and what stock are you looking at?
See, I will not be able to share the names of the stocks of the Diwali picks that big because we haven't rolled out it yet. It is still in
Okay,
the making. We'll be rolling it out by today evening or maybe by tomorrow. So after that, we can
okay.
discuss it. But one of the stock, one of my hot favorites at the time I've already discussed. It is Bajaj Auto. I've shared the levels earlier in the show. You can share it, again. 9,000 is the level where the stock is currently trading at. From a trading point, 8,800 is a stop that is should be now 9,400 to 9,500 are the levels one can look at, and beyond that, from a 3 to 4 months perspective, even 10,000 is on the cards. Another stock which I'm keeping an eye at is Jammu and Kashmir JNK Bank. It is also a low-lying stock from PSU company just consolidating. A breakout was seen. A small stop at 102 should be enough at current levels, and 115 to 118 are the short-term levels that can be considered for this stock.
Okay, got that. So I hope all our viewers have noted down some of those stocks there. And of course, Gaurav, we'll be waiting by to see your report on the festivities related stocks as well. We'll also be, will be helpful for our viewers also to really see all of those stocks and the parameters that you've chosen those stocks on as well. And will be a great ad. But let's actually talk about something which has glittered all through this year. And that's not equities at all. That's in fact the commodities, the precious metals, gold and silver. And, there are dizzying heights, but every day you wake up and you see a newer record on both gold and silver. The unstoppable rally continues, and that has created a wide amount of FOMO among investors. With so much that we are actually given to understand it as far as the silver prices are concerned. And, we've already been marking out for you on Business Today as well how the top traded silver ETFs, as those from SBI Mutual Fund, HDFC Mutual Fund, Axis Mutual Fund, are up between 9 to 13%. And their NAVs, however, suggest valuation should be lower, implying that investors are actually paying up to 10% more than the actual underlying silver value. So when we also compare with what's happening on silver internationally and domestically, there's also a gap. So $51 an ounce for silver is what you're seeing in the international market, but back home it's even higher. And this surge represents a case of FOMO buying. Silver hit 1.7 lakhs per kilograms now, and just look at the swift rally that we've seen in a very short span of time. Suddenly, everybody wants a piece of the metal, and investors who ignored silver below 1 lakh rupees are now rushing in to buy silver ETFs above 1.5 lakh rupees, above 1.3 lakh rupees, even if it means paying a hefty premium at that as well. Same way for gold, also back above the $4,000 or mark on the international level, and back home also, Diwali related purchases have also started to move after a 4 month of low lying footfall because of the high prices. Let's come to both of you to take your view on gold and silver, and how are you advising investors on ETF related buying, physical buying, and how they are now looking at a diversification beyond equities, since equities have disappointed year on year, when we compare to gold or silver in the last couple of years. Gaurav, starting with you.
Firstly, yes, the shine of gold and silver, the metals are back and up. They have actually demonstrated the pace can be taken up any time. A straight up move as far as gold futures are concerned from a 1 lakh to 1 lakh 23,000 plus levels is what we are seeing. So our equity investors can just stick around with their equity trading accounts and look at the ETFs, that is gold Bs and silver Bs for that matter, and they can just buy this just like any other delivery stock that they buy from their trading accounts. And a SIP kind of a position is what I would suggest. I will not be suggesting the investors to take a lump sum position or a lump sum buying at the current levels. Go at gradual buying now, as they have already run up. 1,25,000 is was the level that we are eyeing at for this year. Gold is already near those levels, so frankly, I'm not suggesting to take a whole lot of a chunk at these levels. Wait for some dip to coming, and then the bulk buying should be done. Other than that, sip in both these, the silver metal and gold is advised.
Okay, got that. Prashant, to you again. Fresh highs for above 1,50,000 for silver on MCX. The spot and the current levels that we see, and the futures are even higher. How would you look at them?
We are in the different zone. I think globally, central banks are buying gold as well as silver in their portfolios. And again, India has a different story. We are into the festival season, upcoming Diwali again, and a lot of marriage season also started. So I think gold is in need of all the festivals as well as the marriage. So the situation is very difficult where physical gold is being bought at every high because it is the need of the hour for any festival. But I would advise all the investors to have some kind of digital gold as a portfolio part where we already missed to have such kind of allocation with respect to gold as silver in our portfolio. So I think now the ETFs are giving such kind of advantages of for the investors to have gold and silver as a part of their portfolio, not to directly have a physical gold or a physical silver. Obviously, the way how gold has rallied, silver has taken some kind of space in the people's physical buying, and that is the reason why silver is outbeating the gold in the recent times. So overall, the portfolio we have missed it to have a part of allocation, but again, I think the informed investors are trying to have ETF as a portfolio investments.
Okay, got that. So that's as far as the gold and silver and approach to these precious metals is concerned, even though the FOMO is still there. Let's try and find out how things pan out as we go forward. Already, these gold and silver prices have reached uncharted territories. Many of the commodity analysts are finding it extremely difficult to now pencil in newer targets because they've already crossed all sorts of targets for them as well at this stage in time. So let's see whether there is any dip that investors will be really getting as opportunities to buy into, or will they have to continue to participate in the ongoing exuberance that we are looking at in this space. Thank you so much, Gaurav, for being with us on the show, and for helping us out from equities to other asset classes, how to really look at the opportunities here. But yes, we will look out for your Diwali report on key stocks there. Thank you so much. Appreciate your time.
It was a
We'll
pleasure,
continue our
Sakshi. Thank you.
conversation with Prashant. And Prashant, I want to now ask you, first 15 minutes of a candle is nearly formed. We are still on the back foot. Your suggestion is to whether this new week, which we are starting on the back foot, will actually turn out to be a more volatile one. We've actually managed 2 to 3 weeks of advances on the Nifty gains, but will it be giving back some of those gains this week?
I think yes, today and tomorrow we will be having some kind of negative concerns post what Trump has said last week. We have seen like seven higher highs, higher lows last week, and there will be some kind of profit booking attempt on the fear of again Trump's headlines going forward. So 25,060 would be a support for markets, and 25,000 would be a psychological level where we should come back hitting that levels towards again 25,280 and 25,320 levels in the coming this week. So overall, the week end would be positive. Close can be higher than last weekend close, but again the session of the next 5 days could be very much volatile. I am very much positive because again Q2 earnings seasons are on cards, and that will keep Indian markets very much in the positive zone.
Okay, got that. I hope this has also helped you out, viewers, in getting your thoughts together as far as the markets are concerned. Prashant, to ask you again, last couple of weeks we had all seen how the consumption oriented basket, the primary stocks within autos, even auto ancillaries for that matter, some consumer durables, FMCG, retail, or even e commerce spaces, they bet big on the GST rationalization coupled with the festive demand, and they bet big on that. Is the rally done and dusted for these specific sectors, or do you believe they will again start to move up once this entire purchase is reflected in the books, not in this earning, the current one, but probably in the Q3 when the entire effect will be visible of the festive season?
Before reflecting into the books, I think it has already reflected in the prices. The way stock
Okay.
has rallied from 10 to 15 or 20% in the auto sector, auto ancillary sector, or any other consumer sectors. I think the price has already discounted whatever the growth can be expected from the company or the industry growth. So I think again, auto ancillary should be one sector one should focus more on, because the way they will be seeing some kind of new orders from the auto companies, and that should not be giving some kind of pressure in the auto ancillary as a sector. So auto ancillary sector can be a wait and watch for me for Q2 earnings as well as on the business updates. But on the overall auto as a sector and other consumer as a sector, I think they already booked all the expected earnings for Q3 in the prices.
Okay, fair point. I hope that this has also truly helped you out, viewers. Let's actually try and understand about some of the other key sectors that started to garner some strength beyond these consumption focused sectors over the last couple of weeks. Some economy focused sectors, commodities beyond the ones that we were talking about, precious metals, they have come back in focus. Metals, for instance, largely have also been focused. We've seen some move also in, infra related stocks in oil and gas as well. We have seen some of these economy hardcore sectors really move in as well. Anything within this basket also that you're looking at this point in time as well?
I think metal should be the sector one should focus. Again, it's a global base for demand and supply. I think in this sector, I think Hindalco can be one stock one should be focused more, or Hindustan Zinc can be a second stock one should focus more on as a metal as a sector. I think Tata Steel also is doing good. I think the stock is in a different zone right now, trying to break its resistance of 185 and 190, and the stock can actually go into a new zone about 200 levels, and Tata Steel can be a stock one should focus for this financial year. So overall, the metal would be again in action as a base effect for all the stocks. To focus on again, Hindalco, Hindustan Zinc, and Tata Steel should be morely focused.
Okay, got that. So those are the hard focus sectors that you should be really looking at as well. Coming back to the earnings focus now, Prashant, you started to see some earnings already come in. IT sector is clearly in focus. We've seen TCS post their numbers as well. It was in fact better than the estimates of the street on a lot of accounts too. The stock, however, did see some profit taking right on the day. It reacted to the earnings as well on Friday. Today again is mildly lower at 3022. HCL Tech will be reporting its numbers today. The IT sector as a whole is now down in trades today. Across the board, large caps and mid cap, all stocks are actually seeing some profit taking, or maybe starting on the subdued note, nervousness ahead of the earnings as well. Now, for HCL Tech, is again a wide expectation of the street that the numbers are expected to be mixed. A decent year on year rise in revenue, but the profit margin may remain under pressure. It is the third largest IT company in terms of market cap. In Q1, it had reported a 10% year on year fall in its consolidated profit. Revenue, however, had risen by 8% year on year. Now, again, it is projected that the revenue could continue to grow 3 to 5% year on year this time around as well. But we'll, of course, have to wait to find out what the commentary is. That's going to be extremely key on the client spends, on the kind of deal wins that they are getting, on the overall environment of, because it has already suffered a lot of volatility in the past few quarters. Your suggestion, Prashant? HCL
So
Tech,
one,
TCS, some of these IT companies.
I think once you understand how TCS as a Q2 earnings we have seen, the deals which are there, they have done it almost like $10 billion was almost like a market expectations, and it has done better than Q1 earnings, and Q2 earnings was better than Q1 earnings. But if you see TCS as a no a base for all the IT industries, I think HCL Tech will also report some kind of better than expected street estimations. But again, there has been a good rally seen in the price already. So I think any surprises can only take TCS, HCL Tech more from the current levels towards 1500 or plus. But I think if there is no wow factor in terms of any margin improvement or a big deal announcement, the stock may see some kind of good profit booking attempts after the results.
Okay, fair point. Let's also ask you on another set of numbers that are going to be in focus today, and that's Anand Rathi Wealth as well. This has been one stock that has been a great wealth creator right from the time of IPO. It has also consistently improved its earnings quarter on quarter as well. Now we have another sister company now in the stock markets to Anand Rathi Stock Broking has also come into the fore as well. How are you looking at Anand Rathi Wealth at 3,002 odd levels today? It's up by 1.5% ahead of earnings. Your suggestion?
Very positive the way how markets have been reacting from last at least 3 to 4 months. The volatility has been converted into a business for any broker or a wealth creator. So I think considering these factors, I think the numbers can be better than street estimation, and there can be a positive tick even after the post result expectations. So overall, I am very much positive on the capital market stocks, and in the specifically, I am very bullish on November.
Okay, got that. I hope this has also helped you. Some buzzing stocks. I think CE Info Systems is truly buzzing in trade today, 8% higher in trade. We're also looking at many others that are also buzzing in the broadest index too. Anything that has changed for this Map My India stock? 9.9%, 10% higher at the day's high, 1884. Strong move there, Prashant. How are you looking at this one?
I think 2 days back there was some kind of government officials, talking about Map My India, and the way how India would like to go on a very Atmanirbhar kind of approach. So I think Map My India can be one no map in infrastructure where government may think of implementing all in their own infrastructure. So that would be one reason why the stock can have been seen very positively opening today. But again, as on the valuation side, the stock is looking at a very expensive mode right now. So we should wait and watch for a good correction to have a very positive view on that. But again, the reason would be very clear: government approach towards the Atmanirbhar, impact of Map My India to their infrastructure.
Okay, got that. Let's actually look at India VIX. It's shot up above in two digits now, 10% higher for India VIX today at 11.13 odd levels. I mean, look at this sharp spike that we've seen in India VIX today. How are you looking at this volatility and the fear that's getting instilled into the markets? What do you attribute this to?
I think again the risk of Trump updates on the tariff, the way
Correct.
how again he has started US-China tariff war. Again, India is in the fear zone where India may also attract some kind of headlines towards the new tariff war between India and Trump. But India is safe. I think Trump has invited India to be part of the new peace meet, which is going to happen in the western part of the country. But again, the fear would remain in the Indian market because we are very much near Diwali, and any small update from the Trump tweet can disturb the trend in the Indian market. So India VIX is trying to discount that into its pricing.
Okay, got that. I hope things settle down soon, because India Wix is definitely indicating all of this uncertainty that is in coming back to the street once we have attempted to cross beyond 25,300 or so, and keeping our eyes on 25,500 and beyond. But that still looks like a resistance zone for the markets at this point in time as well. Prashant, what about you? How are you looking at the primary market space today? Tata Capital will get listed, I think, within a few minutes. We should get the kind of listing that is expected in the pre-open trade. And what's your thought there? Did you also, ask your clients to subscribe to this biggest IPO of 2025? Right now we are given to understand that across the board there was a lot of subscriptions that came in. Anticipation was high because it is the largest IPO. But we've seen in the past also, 2 years back, we'd seen what happened with Tata Tech. It's failed to impress on the D street. So Tata Capital, therefore, investors were a little wary because it has just come in 2 years after, and the memory was still very fresh and how the other stock has performed. But what about Tata Capital?
So I think even we were expecting some kind of very decent neutral to positive listing today. It's a long-term call again. Why long-term? I think NBFC as a sector, we are very much bullish the way how RBI has given some kind of liquidity push. So I think all the top five NBFC companies can do better, considering Bajaj Finance as well as Cholamandal Finance, Shriram Finance as well as Tata Capital. So that would be the only reason why we are very much bullish on Tata Capital as a long-term investment. Short term, I think there may be it may see some kind of pressure because the way how unlisted space price hike has been seen, so that will keep some kind of pressure in the near term outlook. But again, a flat opening can be a opportunity for a long term investors. But again, near term there would be a market risk carried away.
Okay, fair point. I hope we'll be able to see. What about LG? Have you been getting a lot of questions also, Tata Capital versus LG, because they both opened almost simultaneously and they were large IPOs that came in. How did you advise clients on both?
I think I will attribute one reason for undersubscription in the Tata Capital was LG Electronics, because it was giving a lot of short-term gain as well as long-term gain. The way how GST impact will come into the sales figures for LG Electronics for the Q3 earnings. So investors started understanding that at least there is some kind of good listing gain can be expected in the LG of around 20-25% in the listing, as well as long term. We have seen how these consumer goods companies have delivered return for that. Again, in terms of valuation, when we compare this LG with other similar players like Havels and any other similar electronic companies, so I think the valuations were also very much decent, and I think a very good company for a long-term investor.
Okay, fair point. I hope you've got some sense there. Let's see how both these companies really react in the markets today. What kind of listing happens, and of course, we will be getting you our top guest views as to what to do after listing as well. Prashant, half an hour out for the markets today. Any suggestion on the key pockets to stay invested in or to start accumulation in, and opportunities can still be found in?
I think auto as a sector one should still focus more on, and there can be a good result updates or any other updates which can see some kind of mood momentum in the auto stocks. Again, second would be capital market sector should be again highly focused. Anand is going to give his results today, and I am very much focused on Nuvama. I think Nuvama can do better in the markets this time. So these are the two sectors I am very morely focusing on.
Okay, thank you so much then, Prashant, for being with us. Viewers, Tata Capital might be looking at a flat listing. On the BSE, it's settled at 330 rupees per share. As far as the issue price is concerned, it was at 326. So just a flattish listing for the largest IPO that came in 2025 is what is being expected. On the NSE as well, a 330 rupees per share settle price is what we are looking at this point in time as well. So that's what is getting indicated, that at 10 a.m. Tata Capital could be getting listed on a flattish note at 330 rupees per share. And we've already discussed a lot with Prashant what would have been the key reasons why we are actually looking at a subdued listing. gained at this point in time. But do stay tuned, as throughout the course of the day, we will get you various brokerage houses and top market experts as to how they are guiding. In case you've been allotted Tata Capital share, then what exactly should you be looking at? Meanwhile, viewers, the festivities are on Business Today television, and we have a power-packed lineup today as Diwali special conversations will kickstart. On Market Masters at 11 a.m., we have Mr. Ramdev Agarwal, the chairman and the co-founder of Motilal Oswal Financial Services, to give us the Diwali and the next somewhat outlook as far as the equities and your investments are concerned. And at 1 p.m., do not miss the global commodity guru, Mr. Jim Rogers, who's been extremely vocal about his gold and silver bets. He seems to be a happy man. He's going to be sharing the festival market outlook as well as how to look at gold and silver at these prices as well. So stay tuned, plan, profit and prosper with Business Today television on all across our digital platforms.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news, we've got your